and welcome to Pro Trader Strategies Market Commentary for Friday, June the 26th. I'm Eric Wilkinson, and you very well may recognize me from mainstream media where I've talked about the economic data, the geopolitical environment, how that impacts the overall markets with my market analysis. Well, I'm doing the same thing in these daily market commentaries, but I'm laying on top of it option strategies that I have specific guidelines that we implement in and around any environment. Yes, we can easily come up with a directional assumption. That is the beginning of the road. Then what we do is look in and around that underlying and find the right strategy for our assumption that we've come up with. Well, without further ado, let's get on with it. Start talking about some economic data and maybe come up with some assumptions or some assumptions with the overall markets. Across the pond, not really a whole lot to see there. But here in the United States, we did get a couple of good economic data points. We got core PCE, which is personal consumption expenditures price index, slightly higher than expected at 0.1%. That's probably due to this move we've seen in crude oil. Then we go over to personal spending, actually came in a little bit lower than expected, 8.2%, expected to be 8.9%. They did revise last month's number up slightly by about a percentage point, but not really a whole lot to see there. Personal income was 8.2%, expected to be 8.9%, so off a little bit on that one. Another revision to the last month's number, slightly higher, which kind of makes up a little bit for that. Personal income, good to see there. It's people with this entire pandemic we have going on here in the United States and the layoffs, good to see there is some income rising with at least the people that are working, that there is some elasticity in income there. And then we got the University of Michigan consumer sentiment, slightly lower than expected, coming in at 78.1, but still a pretty decent number in line with what we saw last month. So people expected that to move a little bit higher, but I think that what's waning on this market for the consumer sentiment is that we are starting to see some more outbreaks of coronavirus here in the United States as we're starting to get out of this lockdown, starting to see this really start to pop up. That's weighing on the market today. Not only that, a lot of investors don't like going into the weekend as of recently, holding on to positions. Why? Because what can happen over the weekend can really affect what our sentiment is going through next week. So we're going to probably see continued bearishness throughout the day. After yesterday, we got a nice big rally. Well, today it's a pullback, people covering those positions, definitely heading into this weekend. And we have a holiday weekend coming up next week. So a lot of people are probably going to be taking off next week. That's another reason to close out some of those positions. Nobody really likes going on vacation with trade positions on. Anyway, we move over to crude oil. It's off by about 46 cents right now, 50 cents we can call it. You know, we popped up against that 50 Fibonacci, trade up into that 39 handle, which, you know, then we start really looking at that 40. But we bounced off of that yesterday, settled just below that. Today, moving off and away, not even really making a challenge at that barrier, and I think that we're going to start seeing this market roll over. Next stop is 32 for crude oil. If we can, if we start to see this settle below that 9-day moving average, that short-term bearishness, I think we'll see this roll over right down to about, actually 33 is probably the better mark to call on that one. We've got gold moving higher today, went down this morning. Equities looked like they were pretty decent, and then we started seeing some of these updates on coronavirus that really caused the market to sell off. Plus, we didn't really get the best economic data today, that weighing on the market as well. That's giving gold futures a move higher here, as you can see, just off of the highs right now, up $7.80, but well off the lows from what we were seeing earlier this morning. I thought we were probably going to see this roll back down into that little value area that I've been talking so much about, but we could see this really want to go up and test that 1800 pretty soon. All right, bonds. are moving higher by about a point, right back to that area we talked about. Right now we're at the 179 handle, up almost a full point on the day, but it's right at the sweet spot. Remember, that 180 handle is that psychological level that I've been talking about. I think we're going to see some time spent at that level as volume starts to pick up. Interest rates aren't going to go anywhere anytime soon, so I think that we're going to see that market start to creep a little bit higher, see some interest rates pull back, and as this is the season to be buying homes, it will be good for the retail or the person going out there and trying to find a home right now because interest rates are going to be so suppressed. All right, we've got Dow Jones Industrial Average off by 530 points near the lows of the day, breaching yesterday's low also. So the market really wanting to roll over. It seems like we are starting to see some bearishness. We are probably going to go down and test the value area low, which is down there around 23,700. So that seems like the next stop as we're starting to roll over here. You can see almost like a head and shoulders pattern going on here in the market with the shoulder here, the head, and another shoulder there as well. And then we move over to the Nasdaq. Nasdaq really showing some weakness. As a matter of fact, earlier today, there was at one point at least, I don't know if it's still the case, but the Dow Jones did not have anybody in the green. It seems like right now we're getting a little bit of a lift off of this Albertsons IPO looking pretty good. It's giving a lift to Kroger and some of the other supermarkets. So that's giving a little bit of a lift to the market. We also saw Nike come out with earnings and they did not look too good. And that was also weighing on the broader markets as well. We got the E-mini S&Ps coming off by about 50 points. Not really getting that bounce that we're seeing like in the Nasdaq, but we've talked about it so much before. Why is the Nasdaq always kind of leading the way? Well, they've got the tech in there, and the tech is really what people are consuming right now because that is where the home office is, and people are still continuing to build out that home office. So the stocks that are going to do well are the things that we've talked about in here: Microsoft, EA, Electronic Arts, things like that, NVIDIA, Adobe. All of those types of stocks are things that people are consuming now. Usually when you went to work, you already had the Adobe at work because they bought a blanket product for the entire company. But now when you go back home, your computer doesn't probably have that Adobe software, or it's not as at least as robust as what you're used to at work. Well, now you got to buy a new subscription for that for your home office. And that is giving a push higher in Adobe. But like we said here, E-mini S&P is off on the day. We can see this on the breakdown. Last night, we did get a continuation with that late day rally. It almost felt like a rip your face off rally towards the end of the day when I was preparing for my webinar, which we did. It went off really well. It was on the long put. So if we are talking about some bearish sentiment coming into the market, there's always an opportunity to add some negative deltas to our portfolio. I highly recommend that you try and find something that you are a little bit bearish on, and we can add a strategy like the long put or the long put spread in this environment, because we can't be overall completely bullish in our portfolios. We need to add some negative deltas in there in case we get that pullback. That's a way to increase some of your yield in that portfolio as well. So check out that webinar. Go to protraderstrategies.com. But you can see here, as soon as the day opened, man, it was just like falling on your face, rolling out of bed and falling on your face here, and continuing to see that into the close probably, as it is a Friday. Nobody wants to hold anything over the weekend. We are heading into a holiday week coming up here with the 4th of July next weekend. Some people probably taking off and maybe staying at the Hamptons all next week. So that's where we start seeing these summer markets really see the volume slough off, especially on a Friday afternoon. All right, I want to talk about Caterpillar because this is a trade that is perfect for a bad market assumption, right? We talked about me putting on a trade here. We're talking about some infrastructure spending with the government. So I decided to play Caterpillar to the upside. And with that being said, you know, I was talking about they had pretty decent implied volatility. It had spiked and looked like it was starting to come out. maybe get a little complacent here, but a move to the upside is what I was looking for in Caterpillar. So I went in there and sold the July 105 puts. Well, that was on the 16th. That was right here. You can see we got a little bit of a drop. I thought it looked like it was ready for a bounce, maybe even just back to the point of control, right? Even a bearish or a bullish to sideways market assumption with this trade. Well, obviously, I've got that directionality completely wrong. We've continued to slide here to the downside. And with that being said, I originally sold those puts for $1.18, and right now it is a profitable trade, trading right around 95 cents. And that's actually not as good as it even was yesterday. Yesterday it was trading around 80 cents, so it was a really nice winner. And why is that? Because we set these up according to some of my guidelines, and so we can be directionally wrong because we set this up in the right environment, taking advantage of duration, theta decay, volatility contraction is really what's helping me here. So when you can be directionally wrong and still make money, that's how you're increasing your probabilities of success, setting these strategies up in the right way. So check it out at Pro Trader Strategies. Like I said, we're going through a roadmap webinar right now where we come up with an assumption and we find the best strategy for that. Well, the best strategy for a bullish assumption in Caterpillar right now was to sell some puts. If I had gone out there and bought calls, I would be devastated because I got the directionality wrong. We got volatility coming out. All of those things would have snowballed on a losing trade. Whereas this, because I set it up correctly, according to these guidelines that we have for you guys, it is a profitable trade. So a little bit of soapbox talk right there. And one other thing I want to talk about, because I mentioned it earlier, is Nike. You can see it is off by about 5% or $5, well off the highs, just completely missing on earnings. As you can see here, a negative PE right there, and that is not good for Nike. I can't probably remember the last time they had a negative move on their earnings there. So that is not really very good. So that's it. That's all I got for you. And this is part of the problem. You know, this is what's weighing on the market because we're seeing some of these retailers we thought would do very well. Lulu coming around the corner. You know, I expected Lulu to do very well because if people are at home, they are probably wearing a lot of Lulu and probably doing very well with some of the online shopping. But that is causing a little bit of a kink in the armor or chink in the armor with Nike coming off, and as people would have expected them to do well, being at home, buying some shoes, getting out and running. I mean, I've seen a lot of people out walking around. You probably have too. I would have thought they would have done very well. And finally, we have to go and talk about our disclaimer here. One other, like I said, we are an educational company. I am here to teach you guys how to trade options. Kind of like what we were talking about with that Caterpillar. I'm not trying to get you guys to follow my directional assumption. I can be wrong on those, believe it or not. No, I'm often wrong. But the fact of the matter is because I picked the right environment, the right strategy for a move, just because the move is wrong doesn't mean you can't make money. You can see right here, I made a bad choice on my directional assumption, but I made a great choice on the strategy. I implemented it in or around that, and it's doing well. So go check those out at protraderstrategies.com. Make sure you educate yourself, but implement these strategies according to your own assumptions. All right, so if you can't take that, take it easy.